Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thank you for having me.
What's been going on in markets? I mean, I saw, Bitcoin, after we did our last episode, it went down a little bit, but it's mostly right back in the high 37s. It was at 38 yesterday. And then equity markets I saw are also performing well. What's going on?
So you've had a continuation of the theme over the past couple of weeks with, data deteriorating and dovish Fed speak. Yesterday really marked like a new kind of stage to it when you had a relatively hawkish member of the Fed, Waller, kind of come out more dovish than a lot of market participants were expecting, basically acknowledging that the fact that a lot of the data is turned and some of the forward-looking indicators are suggesting that, we're going to head to a softer patch of inflation and employment and things of that nature. And so you saw twos rally 15 basis points yesterday. The dollar aggressively sell off. We're talking, euro broke through 110 cable and 27, dollar yen, I think overnight 46 handle. So dollars sold off aggressively. U.S. fixed income went, aggressively bid. And that's generally risk on. And so equities have been reacting pretty well to that news. S&P's flirting with 4,600, which is basically close to all-time highs, not even year-to-date highs, guys. Like we're talking about all-time highs are within sight for the S&P and the NASDAQ. We've seen a lot of, highly shorted names and sort of stuff that's more closer to junk or low-quality stuff do really well. Some of it's a function of like a short squeeze. But long story short, when the Fed is pivoting like this, the market's going to take it as a signal to buy risk assets.
Yeah.
Right? And that's what it's doing. And, what's a risk asset? Every currency that isn't the dollar, right? Russell stocks, meme stocks, things of that nature. And so folks feel like the Fed gave them a green light to buy risk. And I think that's spilled over into crypto as well. And that's why, again, we're still flirting with new trend highs in Bitcoin, alts are trading pretty healthily as well. And so, I think you're just in December and the Fed's telling you that, they see a soft landing ahead.
Yeah, it's crazy. So the pivot is on. It sounds
it's on. However, the risks to that
that's
view
what I was going to get to.
Are that you've got a lot baked in, right? So by the January FOMC meeting of 2025, so it's just like a year and like 2 months, call it.
Yeah.
You've got 130 basis points of cuts, right? You've got by May of next year, you've got a full the first 25 basis points priced in. So there's a lot of like easing that's priced into the rate curve. What makes it so challenging is you don't know like the extent to which they'll cut when they do start cutting, right? Because if you're motivated enough to cut, the question's like, do you cut 50? Do you cut 100? Do you cut 150? Right? What do you do with the QT program that you have? And so it becomes a very hard thing to solve, and you just kind of have to think about like the distribution of outcomes.
Right.
But the risk is that the Fed sees the economy slowing, but doesn't necessarily feel the need to cut rates.
Right.
And that's where the market could get caught off sides a little bit.
I see. And part of the thing too with higher for longer as a idea, which doesn't mean raise more, but it may mean stay high for a longer period of time. If people start buying stocks and equities are at all-time highs or nearing it, and things further out on the risk curve like crypto or meme stocks, whatever else, are doing well, people feel wealthier and then they spend more.
Correct.
Theoretically, and then inflation is stickier, right?
Correct.
It's this like push and pull we've talked about. That's going to be so. It's such an interesting position because they're acknowledging some softening that, and they're signaling that could lead to easing.
Yes.
But at the same time, they don't want to signal that too hard. They want to be hawkish also, so that people, they're kind of like a mean parent who's like, don't go out and spend anything though, right? They gotta like beat us down with language.
Expecting you to spend a
but we know you're gonna. Yeah, it's just such a tricky situation because
it is hard.
We've talked about that Volcker situation where they raised a bunch and then they cut a bunch, but then inflation roared back and they had to raise to like 20%. They don't want that to happen.
Correct. And so it's a fine balance that the Fed needs to strike, and their other considerations are, their credibility. Many eyes, they're not that credible, but
Right.
for them, it's still an important thing to
course.
focus on. And
Of course.
so, yeah, it's tough. However, I would say that their concerns are, not necessarily about the part of the economy that has a huge stock portfolio,
Right.
Not necessarily the people that
but they
are
think
going to
that
feel richer
those
by
people
asset
are doing
prices.
fine. That's a fair
Exactly,
point. Yeah.
right? And so those people already have a huge glut of savings. Their consumption habits aren't really going to change that much. Are they really going to buy a new house right now? And so
Right.
what you're mainly concerned about is, the folks in the bottom quartile of the income distributions, the folks that are having to pay student debt again, the credit card delinquencies that are picking up, the
Yep.
auto delinquencies that are picking up, the folks at risk with, automation moving in, right, at the fringe parts of the labor market. And so that's kind of, where I think the Fed's concern is mainly coming from. In addition, there's structural things that have changed that are now helping the Fed, right? So oil's come off a lot, for example.
Right. Which
I
just-
think you're going on 10 weeks in a row of gas price declines.
And that trickles out throughout the economy. Like, not
Correct.
all just the stuff that uses gasoline to power it, but also all the products that are made from petroleum, right? Like everything, tons of stuff gets cheaper if oil's cheaper.
Correct.
Yeah.
And so, and then also the supply chain stuff has eased super meaningfully. And, I do think there's a certain element of the U.S. consumer is always so strong. They just want to consume. But there is a limit to that, right? Like everybody that bought furniture during the COVID pandemic.
They already bought it.
They already bought it.
Yeah.
And stuff like that.
That
So-
was a big trend, right? Like during COVID, buying stuff to upgrade your house because you were all stuck
you
in
were
it.
staying in it.
So everyone was
but then
ordering
it
the
would
shit.
take 16 months to arrive, right? But 16 months later, you have the couch. Do you need a new one now?
No, yeah.
Right? And so, same thing with durable goods. You bought a new fridge.
So I forget, but we're I don't want to name any specific companies, but the male furniture companies that whether it's self-assembly, did they rip during COVID? They must have, right? I'm forgetting now, but honestly, they must have, because if you're
we engaged in
you're
historic
I need a new
level of
ottoman.
money printing. It just didn't
and the only
matter
thing,
what you
and you
bought.
can't go out, so it's
Yeah.
you're only ordering stuff online basically.
Yeah,
I bought a new bed during COVID. I did.
and those fancy sheets.
I
That
do. I do have I'm telling you, if you're going to spend money on something, things that carry. This is just a clear aside, but in my view, it's things that your body is in, right? Your bed, your furniture, your shoes should be comfortable. A t-shirt, I like to say, merely drapes upon your body, but your sneakers carry the full weight of your body, right? So they should be comfortable.
Got it.
As
No,
a-
no, absolutely.
It's a little bit of an
But
aside.
looking forward,
Yeah.
we do get a bunch of data shortly,
Yeah.
right? So you get PCE, you get non-farm payroll soon. You've got Powell speaking, I believe, on Friday,
Mm-hmm.
and then
And we have another FOMC before the end of the year,
December
right?
15th.
Okay,
You
big
got
day.
another ECB meeting as
Big day,
well,
Fed
a
day.
Bank of England meeting as well.
Yep.
And so there's a lot of central bank and data in the next couple of weeks that might
Did
change.
we get any data on Thanksgiving and Black Friday and Cyber Monday yet? Have you seen anything?
Yeah, no,
about,
I mean,
was it strong?
It was really strong, but it's really tough to say because you don't get the
we
the
actually,
online sales look really good, but they grow every year. So
Yeah.
it's did they grow because they grow every year,
Or was there a
because more
meaningful
people-
pop? Yeah.
Yeah, right. And
Yeah.
so, but yes, people spent money a lot more. Seems like more than they did last year,
which is
a
always the
meaningful
trend
way.
theoretically, right?
Yeah.
Yeah.
But the nature of the spending, I think, is what's most important because there's so many buy now, pay later programs happening,
Yeah.
and people buying stuff on credit in general, and so that's really where the focus is. I mean, I'll tell you, even when I order food. They have
I know.
a pay later section.
Somebody
now.
said, I saw a joke. Somebody was like, I just ordered
Yeah.
a Domino's pizza, and for fun, I decided to pay $1 a month for 24 months or something. But
so
they're
good.
even offering that now,
Yeah,
like
for
retail,
everything.
everything.
Yeah.
I even noticed this on Apple Pay.
Yes,
It
exactly.
literally says pay later if you want. So you
Exactly.
can pretty much do anything. Apple will loan you money, apparently. It's really crazy.
But at these high interest
We
rates,
love credit in this country, don't
yeah,
we?
it's
Man.
gonna be an issue
We are
at some
a debt.
point. Yeah,
It's in our
But
DNA.
here's
Debt
the-
is in
here's-
American
but here's-
DNA.
Here's really what's happening. I mean, partially it's the Fed like has binding constraints. Like if we just kept jacking rates up, like shit would definitely break.
Yeah.
I mean, when 10s were approaching 5%, and everybody was like, "Oh my God, the fiscal path is I mean, it still is." Like,
I know, but that made people really start to freak out about the fiscal.
Exactly. And so, what did the Treasury do? The Treasury was like, "Oh, we're not coordinated or anything. We're going to cut coupon issuance, though."
So people start freaking out about whether or not we can spend this money.
Yeah, it caused a rally in the back.
It is
end.
funny because the Treasury's job is to spend money. That's their job primarily
Yeah. Well,
for the
it's
U.S.
also,
government.
It's also to manage the debt profile.
Well, for sure, but they have to get the money, which is the debt. But I mean, they're the ones they're the bank account for the U.S. government.
Correct.
And so, of course, if they start seeing, wait a sec, our issuance policy is resulting in strong pushback or calls for fiscal conservatism, or then maybe we should change that because we'd prefer if they didn't come in and cut our money.
I mean, basically, though, here's the issue with all this stuff is you got a bunch of people that basically only think a couple years forward, right? And there's no incentive. Like senators are on 6-year election cycles.
That's the best we've got in terms of longer term incentives.
I bet they get elected and like 2 years in they start fundraising again, and like their voters aren't really asking them to come up with solutions for where the economy is going to be 10 years from now.
You've said this. There's no, and you don't get elected saying you're going to cut. Basically,
and it's also like, okay, like there's a ton of people under the age of 30, 35, right? They're not like the most vocal people about politics, but trust me, in 20 years from now, when it's like, wait, the federal, we spent $2 trillion to just pay interest a year, like that's going to be a problem.
Yeah.
Like.
It is a problem, though. Your point about like if you take 2-year House of Representative terms, like you basically have to spend. I forget. There's simple math on this. It changes all the time, but it's like congressperson has to raise like $5,000 a week, like to have a chance at reelection, and they have to start right away. I don't know if it's $5,000, right? The number, but like so literally like they're. And you can pursue 2 primary strategies as a member of the House, like a home office strategy, which is where you're at home in your home state a lot, meeting with lots of constituents and typically raising money from them, or a more policy-focused strategy where you are in Washington more of the time. Maybe you're building your profile by working on high-profile issues, and maybe that's how you raise money. But that you neglect your home state, and basically you have to decide, and you have to always be raising. It's like always be selling. You got to always be closing. You got to always be raising.
Only senator, not to give any endorsements, but the only senator that's made like a lot of sense to me recently about this like fiscal issue and like acknowledging like this mismatch of incentives was Mitt Romney. Like he gave like a speech about it. He's like, guys, like we got to address this stuff, but there's no capacity to.
No.
And then like Stanley Druckenmiller. Like,
sure. And the investor community.
The investor community's acknowledged it, but it's tricky. And then the last thing I want to leave people with for sure is, there's the rational me, the mid-curve me, tells me that this is a market, in Bitcoin at least, that has a lot baked in terms of expectations of an approval, right? But in terms of the pricing of like the actual flows, the subsequent flows, it's nearly impossible to price that in full. Like the pathways that an ETF opens in terms of just flows, like until you get those flows, it's going to be insanely difficult for this market to price in that kind of stuff.
Yeah.
And so, to borrow a phrase from another, client of ours, actually, it's buy the rumor, buy the news.
Yep. Bimneta Bibi from Galaxy Trading. My friend, as always, thanks for coming on Galaxy Brains.